Before we get into the real sauce, let's first understand what an IPO actually means. An IPO, or initial public offering, is when a private company becomes publicly traded by offering its shares to investors for the first time. Now here's what caught my attention. Over the past few weeks, it feels like you can't open Instagram, TikTok or YouTube or any social media platform without seeing someone talking about SpaceX. And whenever a single topic starts dominating every feed at the same time, I immediately start asking three questions. Who is pushing the narrative? Who is buying into it? And who is benefiting from it? Because whether you like it or not, markets are driven by narratives. And if you don't understand the narrative, there's a good chance you are the product being sold. Now let's start with a simple fact. SpaceX has been around for more than 2 decades. Yet ordinary investors have never really had access to invest in it because it remained a private company. That's exactly why the excitement surrounding a potential IPO is so massive. Suddenly, one of the most talked about companies in the world could become accessible to everyday investors. And naturally, people start imagining huge returns before they even ask the important questions. At the same time, we've seen markets pulling back recently, and as always, the internet immediately starts looking for explanations. Some people are saying money is leaving other markets because investors are preparing for the SpaceX IPO. Personally, I think the answer is much simpler. Markets move in cycles. When an asset goes up 15%, you might make $300 on a $2,000 investment. But somebody else who invested $300 million just made $45 million from the exact same move. At some point, those people take profits. And when enough large players start doing that at the same time, markets pull back. That's not manipulation, that's just how money works. Now getting back to SpaceX, one thing that really stood out to me was Fidelity's approach toward IPO participation. Fidelity lowered the minimum retail asset requirement to around $2,000, making it possible for millions of everyday investors to submit indications of interest. Now, I'm not saying that's good or bad. I'm saying you should ask yourself why. Because if the requirement remained at the $500,000, only a small group of investors could participate. Lower it to $2,000 and suddenly millions of people can enter the game. Then you have the anti-flipping policy. According to Fidelity's rules, investors who receive IPO locations and sell within a certain holding period can face restrictions on future IPO participation. Again, I'm not claiming some grand conspiracy here. I'm simply pointing out incentives. On one side, participation is being encouraged. On the other side, selling quickly is being discouraged. As investors, your job is to understand how those incentives work together and what effect they might have on behavior. This is where I think most retail investors get caught. They fall in love with the story before they understand the mechanics. They hear SpaceX, they hear Elon Musk, they hear rockets, innovation, future, and suddenly the analysis stops. But that's exactly where the analysis should begin. Because there are two main outcomes I can see coming from this IPO. The first outcome is that the stock launches and immediately starts falling, leaving everyone searching for explanations. And trust me, there will always be an explanation. There will always be a headline, a reason given to justify why people suddenly lost money. But the second outcome, and in my opinion the more likely one, is that the stock launches, starts climbing, gains media attention, starts creating a wave of FOMO, and people start adding more and more, their friends start buying, social media becomes even louder, and then the sudden drop comes. And that's where I want you to think about the market like a magician. The magician shows you one hand, while the real trick is happening somewhere else. Everyone is staring at the shiny object, while the rabbit is quietly being prepared inside the hat. By the time the rabbit comes out, the trick is already over. You are no longer participating in it, you are reacting to it. The reason whales consistently outperform retails isn't because they are smarter than everyone else. It is because they understand liquidity, incentives, and psychology better than the crowd does. The purpose of this video is not to tell you whether SpaceX is a good investment or a bad one. It is not financial advice, and it is definitely not an attack on the company. The purpose is to encourage your critical thinking ability. The next time you see everyone talking about the same opportunity, don't just ask how much money you can make. Ask why this narrative is being pushed so hard, who's benefiting from it, and where the liquidity is coming from. Because every buyer needs a seller, and every seller needs a buyer, and every major market story exists for a reason. So before you jump into any investment, make sure you are seeing the magician's hands and not just the rabbit coming out of the hat. Because once the rabbit appears, the trick is already over. Thank you for watching and see you in the next one.